The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here at noon each trading day, and let's see what's going on. And thank you for our host for some great programming. Wow, look at that red candle in the E-mini. Remember we were talking about this pattern for at least since Friday, that there's this oval pattern. And that at some point, actually it goes back to last Wednesday, Thursday, when I did my webinar on the 2nd of August, I was talking about this is a perfect time for a two-series webinar over 2 weeks, because July's candle had been finished in all the indices, all the stocks. We were into August, and we would see within the first 2 weeks what's working, what's not, what is way overbought, what is sort of oversold and might have a rally. And that's kind of what we were looking for. We have a stock that we had picked, I think almost the next day, as an example of the Chapman Wave methodology. For the long side and so forth, that's actually doing quite nicely. It's up from our purchase price. And this is very interesting in a market like this. Trying to find those under the radar stocks is going to be very important. So let me just go through what we're looking at here. The E-mini made that oval pattern. That's the leg, that long series of highs. Stalls makes, it has to be an oval pattern. Makes the body an oval body pattern. Usually it occurs at a D or an E. And then there's a spike to the upside, which invariably is not confirmed by the technicals. Look at that spike to 248.50 in the E-mini on the 8th, just 3 days ago. And yet the MACD was going down, the stochastic was going down. Now we're into, so that's the neck. Then the head is often just an inversion of the bar itself. There's no real shape of a head there. It's a stalk after all. And now it's pointing down, and this is the beak. And when the beak concludes, there's a really powerful rally to the upside. And then you have to use all different techniques after that, because it has done its job, the Chapman Wave stalk leg formation. So what we're looking at, one of the reasons why we stayed in our short side with the Dow is because of a series of patterns like this. It was suggesting as well. Remember, I spent some time, and we did this in my webinar, some time on this particular chart right here. I showed the long-term trend, one single green trend line that was support from 2003 in the Dow. There's a monthly chart, all the way until it broke. It really decisively broke. That was in June of 2008, just plummeted, went all the way down from the high that was made at, if I remember correctly, was 14,198 in October of 2007. And what did it go down to? It went down to a low of 6,469 in March of 2009. And then it starts coming up. Now there are two lines. One is this longer dashed line, and the other is the very long term from 2003 trend line that we were looking at. Well, I spoke about this and showed it in my webinar. Go to the front page of TFNN. You'll see all about that webinar. I think it's actually a very critical one in the sense that the webinar itself is not timing for the day. It was a webinar that wanted to look at the big picture as well as looking at different sectors. What could work? What needs a breather? Why are the semiconductor stocks looking really overbought? And therefore the follow-up, and then every day we get the follow-up, and then the second webinar, Wednesday a week, that's this coming Wednesday, the 16th, that's where we put the package together and say, what are we looking at for the rest of the year? Can sector rotation still keep the market higher so that we can go into 2018 buoyed by the rotational sector? Or is this the time that we're going to see the majority of sectors pull back and we do get something like a 12 to an 18% or maybe more correction? We'll talk about that. We'll talk about the VIX in a moment. Let's just continue with this. So I'm looking at, let's get out of that. Let me just go back to my 4 time frames actually, because we had that peak D in the Chapman Wave. You always look for the Ds, and that D was right there, 2488.50 in the E mini September contract, ESU 17. trading now down 24. That is a lot to make up. And I'll talk about intraday, but let's just go through these numbers. Why? Because the break below the 9-period moving average in the E-mini of 24.67, this is a whopper. This is almost 20 points below, more than 20 points below that. And the MACD and stochastic are very poor. And you're looking at, I kept talking about this, saying that the stochastic and the MACD, especially the MACD, in the weekly chart, is just not confirming the rally. The stochastic had held well. Even now, it's at 91%. Relative strength is sinking. On-balance volume gave a heads up that there could be a turnaround the other day. What I am looking for is to put the package together. Let's do this. We'll go to the Dow. Dollar INDU. There we go. And that Dow's down only 126. I say only because the S&P down 24. The Dow should be down 175 to 192, somewhere around there. I don't understand why it's not, because of the rotation. I do understand. The rotation manages to keep just enough Dow stocks kind of buoyant or keeping the market higher while the rest are pulling back. So you've made your peak D. Remember, Chapman wave Ds are very important. D in the daily, D in the weekly, leg D in the weekly, leg E in the monthly, leg E 120-minute chart, sell signal, went to sell mode in the 120-minute chart of the Dow. So now what we're looking at is the resistance is now 21,976 of the 9-period moving average, and the 21,900s has to hold because 21,855, I think it was somewhere around there, would be the very next level to be looking at. Could there be a bounce? Well, let's see what's happening here. We're going to go to the S&P. SPX is down 22.76 at 24.51. That's made a peak E. I'm actually going to put that in right now. No matter what happens, that'll still be a peak E. And that is E with a down arrow right there. So the sell signal, probably a sell mode by tomorrow in the S&P. The weekly chart is in leg E. Monthly chart is in leg D. All-time high was 24.88. No, 24.90.87. Let me put that in, otherwise I'll keep missing it. 24.90 point, I think I said 87. All right. So now we're looking at the MACD and stochastic, very poor in the daily chart of the S&P. Let's go to the Qs. They've been holding up spectacularly. They're at 142.09 right now, down 2.05. And what I had said the other day in the Chapman wave methodology, it took me years to figure this out, a lot of money, but years. And what we were looking at was that there was a failure at 145.96, the high of the 27th of July. The rebound on Tuesday only went to 143.90. I said it has all the characteristics, but I would have preferred if it went to at least 144.40 or something like that, really close. It didn't. So I'm still going to consider that there's a really good chance that this is really a double top of consequence in the Qs at 145.96 and 143.90 on the 8th of August. And now we've gone one-to-one to almost one-to-one to the downside. Got to be real careful. But the weekly is still price-wise holding well, but technically it is not looking very good. I'll be back. Basil Chapman. We'll talk about gold, because gold had a huge move to the upside, up 11 points in leg E. I'll be right back. Basil Chapman, Tiger Technicians Hour. My pleasure to be here, Monday through Friday. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman, will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. So we're looking at the Dow down 132. What I wanted to look at was we were going in sequence. We went to the QQQs. The QQQs down 2.13. Hey, this is very important. The IWM, which was the weakest index of all, is still the weakest now. It's down 1.33% at 136.95. This is a peak F top in the weekly chart. This is something to take seriously because it has broken this major trend line. Let me just put this into context right there. Look at that. We spoke about it yesterday. I had a whole segment on this, that the arch formation said that that trend line must hold. Well, it's a weekly chart, so we've got to wait until Friday. But right now, it's just snuck underneath that major line. And look, the technicals are very weak in the weekly chart of the Russell 2000 ETF, the IWM, down $1.92. Now, what we're going to be looking at is, what do I want to do? Yes, I want to do a couple of things here. I wanted to go to gold, and gold right now is in leg E. There was a left side, right side price time match. Let me just do this. It's gone through the first one in a little bit longer time frame, 2 bars actually. And it is going to try to tackle the high that was made on the 6th of June at 1305. Now, what we've got to also look at is this left side, right side price time match that we're looking at here goes to the 11th of August. So that's got to, what are we, today's the 10th? That goes to the tomorrow, and tomorrow being Friday. Friday is usually a very interesting day for gold. Now, I'm also looking at this in the context of silver had a really good move. It went right to the 200-period moving average. Remember, we were talking about that the other day. It was far away, and then all of a sudden got closer and closer. It just hit it today, 17.19. The high today was 17.24. Now what we're looking at is what happens with the VIX index. Now, my contention was that the VIX index flipping with such a sharp move the day of an all-time high was very unusual. The more I analyzed it over yesterday afternoon into the evening, the more I considered that I have to just stay with the notations of the Chapman wave, maybe not get involved with the VIX index. The VIX, at this point, this is North Korea, 15.36 is the high on the day. We're at 14.92. Under every other condition, I'd be saying, uh-oh, start being really careful from here, because there could be a very quick flip to the upside in stocks but I don't see any resolving of the issues over the next few days. I see a little bit of appeasement, but I don't see a resolution. So in a sense, I'm going to keep that as an active thing and say, hey, you know what I say? The VIX in the teens starts to, it means that there's selling pressure in the market, buying pressure in the volatility index. That's the only way I look at it. It's much more complicated than that. I try to make things as simple as possible. And I'm looking at this, and it's gone to the 200-period moving average in the weekly chart. We've seen weekly charts that on a Thursday are skyrocketing in the VIX index, and out of the blue, by Friday into Monday, you can see how many times these things have just flipped around, even on weekly, especially on weekly charts. I'm not sure this can be the case, because the threat is going to mid-August. So that goes into next week. The other thing is this. If I look at all these different indexes, let me even include the NYA.X, the New York Stock Exchange, right here. Oops, oh, they gave me trouble last time. Maybe that's the one. All right. I'm not going to go to the NYA. I'm going to go to just the XLF. I'm going to just move it along. The XLF is the daily chart. Uh-oh. Format. Just say close. Just say Control R. There, we've got those. So we've got the 120-minute peak F and the XLF, which is the financials. Very sharp pullback. It's down 31 cents today, but altogether from the 25.50s down to the 24.90s. That's a big move for the XLF in a short period of time. Now what we're looking at is, I'm going to move this from here to here. Nope, it's still messy. I'll get that daily back. Don't worry. So back in the meantime, what we're looking at is that the XLF has pulled back quite sharply. The KRE, which we looked at a little bit, I was asked about that before the show started, as the show was about to start, has really pulled back. And this is the SPDR S&P regional. So the XLF, which is the S&P Select Financials, sharp pullback. The KRE, the SPDR S&P Regional Bank, sharp pullback. And if we're looking at, say, Goldman Sachs, I won't be able to get the chart to come up now. I'll have to wait just a moment. Look, the Goldman Sachs, which I think later on, maybe in this year, is going to be a leader, but not now. I just think that it's a chop area for Goldman Sachs, down 369 at 227. This has gone to leg A, B, leg B in the weekly chart. We're going to watch this really closely. So I'm trying to put the package together now. I want you to show you the Chapman Wave. This is the software that I had developed that gives levels of resistance and levels of support. Let's go back to gold for a moment, and you'll see that gold right at 1290 is bumping into resistance in the daily. 1309 is the resistance. 1302, 1309, and 1325 are the resistances to the upside. Go a little bit further back, you'll see 1292s. And if you look at the 120-minute chart, it just broke through the resistance of 1286. What's really important about this, if you look at the monthly chart right here, monthly chart says that the action is really quite good. It's not great, it's just good. And it needed to do that because it's trying to form a head and shoulders, inverse head and shoulders in the monthly gold continuous contract. That's what I wanted to show. And I want you to quickly go to the dollar and show you that the dollar is holding pretty well. It's up, it's down 3 cents. I'm watching this very closely because the candle that formed last week and the candle that's forming this week is suggesting that the dollar is desperately trying to form some kind of a base, at least for a bounce. If it cannot do that, gold has the opportunity to go quite a lot higher. Now, let's see if I've got my charts back here. Now, let me see what I can do. It's very interesting. Usually it comes back after a moment. I think that I was just looking at too many charts at one time. Usually there's no problem at all. So what I am going to do is this. Within the context of our looking at the different sectors, I wish I had that daily chart right now. I'll do it over here. If you don't mind, I'm just going to jump over to the there we go. High grade copper, HG. continuous contract, just pulling back for the first time after a really fantastic move to the upside. It's still saying, I'm holding in. I'm not giving up anything yet. And the weekly chart is very strong. Monthly chart is at a really nice, I believe it's at a D or an E in the monthly chart. So these are all very good. This is good action. Crude oil, if I can go to this here, the crude oil it was up earlier. Now it's down 33 cents. It's really struggling. And crude oil has given me a clue that you've got to treat crude oil not as a commodity like the golds at this particular point. Just for this moment, I'm going to treat it just as a separate commodity in its own world. Basil Chapman, Tiger Technicians Hour. Dow's down 144, S&P's down 26. I'll be right back after these messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Okay, so now Dow's down 147, starting to catch up to the minus 26 of the S&P. This is what I really wanted to look at. In the volatility index, this move right now, I had a really great email. Let me see if I can find it here. Of course, I won't find it because I need it right now. Subscribers sent in a note on the VIX talking about it in terms, okay, there it is. Your Rob says, as VIX explodes, a painful warning, the Vega of VIX ETFs has never been higher. So as I understand that is the buying pressure of the options of the VIX. It's really giving readings that are most unusual, the most unusual we've seen. And that's saying to me that if this is released in the next one or Thursday, so Friday, Monday, Tuesday, Wednesday, Thursday, if it's released by midweek, we might find that there's been a correction, and that correction will find support. But perfect for my Wednesday webinar. I mean, I hope I can put it all together, but it would be really good to be able to put it together in such a way that the outlook for the rest of August going into September, maybe even October, will be clarified by the distance between the fast-moving average, the 9-period differential of the MACD and the slow-moving average, as well as how much the stochastic has pulled back in the weekly charts, not the dailies, but the weeklies. Okay, now let's get to nitty-gritties. So the VIX index now is almost at the high at 15.31. Something is going on, and you really don't want to fight this. You don't want to, I'm looking at this, my eyes are popping out because we have two pure long positions, just stocks. This is not long, short ETFs or anything, just long positions. And one is holding above our entry price quite nicely, considering the day. And the other one just went to a new recovery high. It's up 20 cents at 0.20. And I'm absolutely looking at this and I'm saying to myself, this is a market that is, at this point, has been very rotational. And there is a chance that for the first time, we're going to see something unrotational about this decline. If the volatility index, and I'll make it real clear, now in the 15s, the other day it was at 8.84, it's almost 100% higher. So if that volatility index stays going all the way through to Wednesday, up in the 13.5 to 14.5 or higher area, that's going to continue the selling pressure. So I just wanted to get that out. That's the way I'm looking at it. The moment the VIX index starts to slump and go into the low 12s and 11s again, this market's ready to rebound. And that's what makes this such a critical period for August of 2017, just in terms of price-wise and time-wise. The question I had about Macy's, yes, we were long Macy's. We took something off at the original price yesterday, and we took a very small loss. And the reason why I said I don't want to hold it into earnings today is because thinking it through to myself, I said, wait, if cores can spike higher and you get a couple of the other retailers having very good moves to the upside, gapping up, moving 5 points to the upside, and Macy's couldn't respond, it's telling me that Macy's is the conglomerate figure. Macy's is like saying it's selling not just cores, it's selling all the different products in all their different vestibules, all their different counters, and they are much more vulnerable. They can't turn around that quickly. So it seems to me this is what the price is saying, down 2 at 20.98, a minus 9%. Kevin Hinks had a great trade on the Macy's. He had I believe it was a spread. He had it sounded really interesting yesterday when he was putting it on, and this morning he discussed it and they made money on it. But what's really interesting about it is that in terms of Macy's, it's about to take up 20.85 was the low. It's gone to 20.72. It's made a new low. And that says be real careful in the retail area. My suspicion is that if you look at the sales that are going on, and I like to gauge markets simply through looking at sales, what's on sale, what's on not. What does Home Depot have on sale? What do they have a plethora of? What are they looking to get rid of? And I'm looking at that in the housing market. And the housing market here, certainly in the Newton area, so in Massachusetts, I'm looking at some houses, higher price houses, staying on the market quite a while. And because of it, when I read yesterday, first of all, I heard Tom talking about it. Spoke about yesterday. Bloomberg came across with an article about Midtown Manhattan, a proposal to rezone a more than 70-block stretch of Midtown East, which will grant commercial developers the ability to upgrade the area's aging office building stock, was approved by the full city council Wednesday. I've been discussing this for my subscribers for years now, and especially the last year. I didn't want to do anything in the last webinar. I wanted to leave it for the next webinar, not earlier in the year, but about now, because August of 1929 is when that's exactly when the Empire State Building Papers were signed. That's exactly when Rockefeller Center was signed. That Labor Day weekend was the all-time high, 386 for the Dow. I don't think this is the case right now. I think this is going to extend a little bit longer, and it's going to be very confusing. But this decline that we're seeing right now, the symptoms, the peripherals, the socioeconomic, the political environment that I'm looking at is so closely matched to the late 1920s that I think eventually we're going to have a real estate glut that we haven't seen is going to make the 2007, 2008 market decline in certain areas look like a cakewalk, whatever that means. The glut of building in Brooklyn and Manhattan is beyond belief. And here in Boston, it is, I've just now, in all the years I've been here, I've never seen anything like it. So as far as real estate is concerned, the glut is very close by. In terms of the stock market, until the millennials start, when you go to the bank, instead of them on their phones talking about their mortgages or meeting up with a new house, the millennials will be talking about the stock market. And that's the way I'm looking at it. So this is a really important phase in the overall big picture of the market. Where it stops is going to be very interesting because of the VIX this high, coming right off the top. It means that either the VIX is going to scream into the 30s, 40s, and 50s, or we're within a few days of some kind of climactic thing that says, okay, enough for now. Now we're going to have a good bounce, and that bounce is going to be the big test of what comes next. So that's it. I got in the Macy's. So we got out of it, and now it's down 2.17 at 20.86. And the reason was you can have some of the retailers, the clothing companies, do fantastically because they've managed the internet very well. But Macy's is a different picture. That's why I said, it's going to take a lot longer. So we're back. A lot of questions coming up, and we'll deal.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I've always had a question about the XMI. That's the ARCA Major Market Index. Actually, ARCA is arcane for sure because no one actually uses it. I used to love this as an option trading vehicle like the OEX years ago. Anyway, now it does the same thing, but it just doesn't have, you can't really trade it as like it used to be. So ARCA Major Market Index leg E in the monthly, F probably F/C in the weekly chart, peak E, and this is actually a sell mode in the daily. So yeah, we're getting there. So looking at the questions I have. So XOM, let's see what XOM. ExxonMobil down $1. So what I was saying about for a long time, but especially about a week ago, is that for dividend plays, I don't really trust the oil, ExxonMobil and Chevron, the integrated oils. Something's going on with oil. It's a little different, even though I think that there's tremendous competition in the telecommunications, like for Verizon, telephone, etc. I think that ExxonMobil and Chevron offer a different kind of volatility. At least that's the way I'm looking at it. Chevron's way better. CVX trading at 110.53, only down 36 cents. I'll have to look at this a lot closer. I think maybe Chevron might be the one because it has so much, it's lifted off the base of 103, it's at 110 so nicely. Even the monthly chart's improving. I'll set that one aside. But I think, what was COP? Is that the financial? Or is that, yeah, ConocoPhillips. ConocoPhillips is a little better than Exxon. Maybe Exxon's the worst. So I'm going to look at that. I didn't want to have 2 contingencies here to be talking about crude oil and to be talking about a multinational for dividend as a dividend play. That's 2 you remove twice from the core. So that makes me a little nervous. Verizon is holding quite nicely at 48.11, and telephone is not quite as good, but still pretty good holding. And even there, I think that if you look at a VG Vonage, trading way up there at 8.21, and when just the other day it was at 6.51. This is telephone services, a different way of communicating. It isn't through cable, etc. Vonage Holdings, I think there's competition coming. I'm looking at these dividend stocks. I'm saying, it's going to be tough. Okay, that's all I'm saying. It's going to be tough. So you're going to be very selective and very careful. The next question I had was GCO. Whoa, down 3 at 28.15. Genesco Inc. I can't remember what Genesco is, but it ain't looking good. It's looking very poor. Let's see. Sarah tells me what it is. 52-week low, more lows to come. Oh, footwear. Oh, my, footwear. What about shoe? Shoe. Oh, that's gone. Oh, shoe, SHOO. That is Madden or something. Yeah, that's Steve Madden. That's holding very nicely. Yeah. Oh, what about Nikkei? NKE. Yeah, holding okay, but not great, but not bad. All right. So another question I had was, let me find it here because. Oh, there it is. Okay. So had a question. Yeah, we've dealt with the VIX. Just someone wants to know about JP Morgan. JP Morgan. Now, JP Morgan is down, made a peak D top at 95 point something or other, 95.22. So when I look at the patterns that we're going through here with the cup formation, with the cup and handle, one of my least favorites, unless you do it exactly the way they have it in IBD, and that means you've got to time it perfectly because you want to get the low of the handle and the breakout, because if you take it from the actual breakout of the left side lip, invariably the cup and handle pops up and comes right back into the handle. It's one of my least favorite patterns unless you time it perfectly. The Chapman wave cup and ladle is fantastic because what does it do? It goes straight through the left side high. In this case, peak D, that high of 93.98 the week of the 3rd of March in JP Morgan, and that holds well and then continues up. And it means that if it's in like a B or a C, you should still go to at least a D before coming back. So that's a much better pattern. So JP Morgan not acting very well, down 77 cents. I'd be a little careful because now we're going to go to the TLT. The TLT had a really nice move to the upside. I looked at this the other day and I said, if the stock market is going to pull back sharply, we might see the safety of bonds come into play as money comes out of the volatility of stocks. It went to a leg D. Remember we spoke about the C1 peak, C1, C2 in the Chapman wave methodology. There should still be a leg D. There was a leg D. However, it's not good enough. I want to see, to really know that this market is going to pull back way sharper. I want to see 127.50. I want to see us get close to 128.57, the high of the 26th of June. And that's going to say to me, watch out below. This market is highly vulnerable, and money is going to keep coming into stocks. And why? Look at the TNX. This is the 10-year Treasury note yield. It failed at that peak B, which was underneath the previous high, so that's okay. But it's on the 200-period moving average, and that's going to be very important at 22.31, 2.231. If it breaks down, there's a chance that it could test the low of June of 21.03. I think that something is going on here in the economy, and you can see it. And I don't think that the Fed wants to move. They're going to just kind of hum and haw. So now if we look at the different, if I wanted to go to the top stocks in the NASDAQ type stocks, so Amazon made that peak D top. I didn't type it in. I should really. At 1,083.31 on the 27th of July. It was a peak D in the weekly chart. The daily's in a sell mode. If Friday, the Amazon at 960 down 21 right now closes anywhere under, say, 975, that'll be a monthly sell signal. I should say sell mode. I just need to see what happens Friday. I don't want to jump the gun. You're looking at the SMHs. SMHs, huge move to the downside leg C. You got a trend line right there that it's got to hold. If the SMHs take out 83.90 in the next 2 days, wow, that's going to talk about the weekly chart saying, watch out. You can come all the way back to retest the low of 80.92 made early July. And that monthly chart is still only in peak C. So that says later on we should see a good move. Look at NVIDIA, NVDA. NVIDIA took a dive this morning down 6 at 166. That is a peak E with that failure. You remember we looked at this. Who was I with the other day? We were looking at, I think the XLF we were looking at, and I was saying the left side high had good technicals, and it's rallying now, but the technicals are very poor. Look at this, is exactly the same with NVIDIA. That says to me at 166, 157, the 9-period moving average in the weekly chart is highly likely to be hit and tested in the next few days. And this is one of the best companies. They're in everything. So, well, let's see what happens. I'll be back and I'll give you a little summation of what I'm looking at straight after this very important break. I'll be back. Dow's down 151, S&P's down 26.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Great programming coming up. I got Steve Rhodes, you've got Dave White, you've got Tom O'Brien again, and it's Thursday, Andy Head. So stay tuned. And let me just get that. Yeah, Suncor Energy, 32.33, down 44 cents, made a peak E. Just watch this closely. If you're looking to get in, just have patience. When it gets to the 31.50, 30.50 area, if it does that, that's kind of where you want to look at it, because this is a single leg A to the upside, and in the weekly chart. And the monthly chart is actually holding quite well. So I wouldn't be shorting it. I wouldn't be buying it. I'd just be waiting to see, because the monthly chart is still has a very good MACD. So that says to me, and it has a potential for a squash in the weekly. Let it pull back. Maybe this is going to be a great one, because if it comes back and doesn't break down under 30.50 in the next 2 weeks, 30.50, yeah, it's only $1.50, it's 5% correction. That'll be very good. Okay, so this is what I wanted to say. As far as I can tell, The rotation now is becoming more severe as sector analysis takes its toll. Meaning that if I look at the XLK, it is just beginning a consolidation. Peak D in the daily, I can't even put anything other than if it closes here, probably I have to call it a sell signal, but it really needs to close under 57.53 one more time at 57.04. But the weekly chart has poor MACD. It's going to come down, but as long as it holds the MACD should be pulling back more with the price, but the price is holding. So I'm just going to say that the XLK Select Tech Spider Fund is going to be a really big clue come Tuesday or Wednesday of next week. If it's under 56, that weekly chart says, going to probably test the low of 54.25 made in July. If it just held really well, it says sideways consolidation, more a rectangle formation than anything else, and keep an eye on it, and that's going to be a good sign. Intraday, watch the VIX index. So far, the VIX is making highs. It's pulled off that major high of 15.49. And if all of a sudden the VIX pulls back under 13.90 by 3 o'clock this afternoon, you could see a bit of a bounce. Treat it as a bounce because most of the dailies are in sell signal to sell mode. I'll be back later on this afternoon with Tom. Otherwise, have a great day. I'll see you tomorrow at noon.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.